Environmental insurance is a specialist class. It's there to cover a broad range of costs and liabilities that arise out of a pollution incident or incident of environmental damage. So really the insurance is there for the consequences of that, which would be cost to clean up the pollution, payment of damages to third parties because of injury or damage to their property. And increasingly it's also the costs of restoring natural habitats and biodiversity that have been damaged by the incident as well. The environmental insurance has changed a lot over the years, and that's been driven by numerous things. I think legislation is a huge driver. It really kind of came about in the US originally, where environmental law created huge demand for risk transfer products, and also other traditional insurances didn't really cover pollution to any great extent. So environmental insurance grew up as a result of that. It's pretty much all industry sectors and all sizes of client. So the demand has grown nicely, and at the same time competition in the insurance industry has allowed the price point to come right down, so it's now far more affordable for a lot more for a wider range of clients. A lot of territories haven't really been too concerned about environmental protection over the years. China's a good example of that. So what we're seeing now is a trend towards more and more of those territories enacting law which looks more at environmental protection, not just economic growth. And they are using the EU or the US model to do that. So what you're seeing is environmental insurance becoming far more global as a product. Which is no bad thing for us at Lloyd. I think we'll see more and more companies recognise their exposure and also recognise the value of insurance in a way of transferring the risk that they face. I think in countries where the law is less developed, I think we'll see some fundamental legal change which will create demand for the first time. So those new territories, if you like, where they haven't really looked too much at this, and that creates demand purely because the law comes into play. I think the stereotypes are pretty clear. It's about perception and misperception, actually. I think one of the major ones, certainly affecting the UK and European market, has been environmental insurance as a transactional insurance. It's really been related to sale and purchase of property or merger and acquisition type activity, where people are concerned about historical pollution creating future liability. The reality is it's now more used for ongoing operational risk that a company has from their assets, not legacy risk. I think also there's this impression that it's only useful to the larger companies in the heavy industries. While scale of operation can increase the chances of an incident, very, very small companies can also have an exposure there from an independent contractor to a global conglomerate. And the sector type as well, I think. The list of pollutants is pretty broad, so whilst chemicals and petroleum products certainly create problems, the list of possible pollutants would include items like milk or olive oil or beer. And I think, whilst they're not a problem for us in moderation, they can cause significant harm to the environment. I think the future growth for environmental insurance is one of geography and client segment. And then competition is significant. That again is occurring globally, so we're seeing more and more syndicates and companies offering solutions here, so that's driving price down to an acceptable level for more companies, so there's the demand. And we'll see more and more industry sectors and sizes of companies going down the route of buying insurance for environmental risks. Because it's affordable, they're becoming more aware of the exposures, partly because of the law changes and partly because of the brokers and our education work that we do.